Hey everyone, welcome to Crypto Unlocked. I'm your host, Daryl, and we've got something juicy to talk about. The United States claims to hold over 8,000 tons of its gold in its reserves. But here's the kicker. What if I told you that no one's actually laid eyes on that gold in decades? It's supposedly locked away in high security vaults, with the most famous being Fort Knox Bullion Depository in Kentucky, which holds about 4,500 or 4,580 tons, nearly half of the U.S.'s total. The rest is split between the U.S. Mint and the Federal Reserve Bank of New York's vault. Officially, the U.S. gold reserve have hovered around 8,100 tons for years, with only minor fluctuations. The government values this gold at a fixed book value of $42.22 per ounce, totaling roughly around $11 billion. But there's a catch. That price is nowhere near today's market value. At current prices, this gold would be worth hundreds of billions of dollars. So the U.S. gold reserve is a massive asset, even if the official value hasn't been updated since the 1970s. But why not? You'd think the gold reserves by now would want to be reviewed annually, right? They're supposed to be, but they aren't. And recently, U.S. banks have been shipping thousands of gold bars from London to New York, fueling all sorts of theories about what's really going on. So if we peeked into those vaults today, what would we find? Why won't the government just audit the gold and tell us? And if it's missing, what would that mean for everyday people? This is one of the most intriguing stories out there. I'm excited to break it down for you. Now, gold has always been a part of Americans' history, but there's a long history of rumors that U.S. doesn't actually have all the gold that it claims to. First, let's rewind. How did the U.S. end up with over 8,000 tons in the first place? In 1933, during the Great Depression, President Franklin Roosevelt ended the gold standard for U.S. citizens. Executive Order 6102, forcing Americans to surrender their gold, coins, and bullion to the government in exchange for paper dollars. It was a controversial move, but it led to a massive influx of gold into the U.S. Treasury. Now, to store it all, the Fort Knox Depository was built in 1936. By 1937, trainloads of confiscated gold were being moved into these new vaults as World War II loomed. The U.S. also took in gold from other countries for safekeeping by 1941. U.S. gold reserves hit their peak. At that point, Fort Knox alone held over 20,000 metric tons. This came from decades of trade surpluses and gold inflows from Europe, which entrusted the U.S. with its gold during the war. Gold was central to the monetary system back then. Under the 1944 Bretton Woods Agreement, the U.S. dollar was pegged to the gold at $35 per ounce, and other currencies were tied to the dollar. The U.S. massive gold stockpile gave the world confidence in the dollar's value, but in the 1950s and 60s, things flipped. The U.S. started running trade deficits and spending heavily on overseas commitments. Countries began exchanging their dollars for gold, as allowed under the Bretton Woods, and gold steadily flowed out of the U.S. vaults by 1971. U.S. reserves had dropped to roughly today's levels. So what did the U.S. do? In a bold move, President Richard Nixon closed the gold window on August 15, 1971, ending the dollar's convertibility to gold. This broke the Bretton Woods system and shifted the world to a fiat currency standard. The U.S. decided to hold on to its remaining gold rather than let it keep draining. But if the dollar isn't backed by gold anymore, why does the U.S. hold so much gold still? Here's where it gets tricky. The Federal Reserve doesn't directly own any of the nation's gold since 1934. It's all been under the Treasury's control. However, the Fed holds a gold certificate issued by the Treasury valued on its balance sheet at $11 billion figure, reflecting the official gold stockpile at $42.22 per ounce. The physical gold, meanwhile, sits in Treasury vaults, even though the dollar isn't gold-backed. Gold still plays a role in the dollar's perceived value. Senator Rand Paul has argued that gold implicitly underpins the dollar's value, which is why the U.S. doesn't want to sell it off. It's a symbol of stability from a bygone monetary era. Here's the interesting part. If the U.S. marked its gold price to market value from $42.22 per ounce to today's market value, the Treasury could issue more gold certificates to the Fed, effectively injecting hundreds of billions into its assets. That could help reduce our national debt or stabilize the economy. So why not do it? This is where the theories get wild. Despite the government's assurances that the gold is safe, many people don't buy it. The secrecy around Fort Knox and other vaults fuels suspicion. You can't just waltz in and check. Back in the 1960s and 70s, rumors swirled that most of Fort Knox's gold had been secretly removed, with some claiming President Lyndon B. Johnson shipped tons to London. According to this theory, the U.S. gold might have been used or lent out, leaving Fort Knox as an empty shell guarded for show. These ideas gained traction as U.S. gold reserves shrank in the 1960s. Another theory suggests that the gold in Fort Knox isn't even the U.S.'s historically Fort Knox stored gold for other countries during the World War II and the Cold War to protect it from threats like Nazis or Soviets. Maybe the gold is there, but it belongs to someone else. Officially, though, most foreign gold has been returned, and Fort Knox is supposed to hold only U.S.-owned deep storage gold. Others speculate that the gold has been swapped out or loaned out secretly, though the U.S. officials deny any such actions being done. Then here's the wildest theory of them all. Some of the gold bars might be counterfeit gold-plated tungsten, which has a similar density to gold. This idea stemmed from an unverified 2009 report claiming China received fake gold bars, sparking fears that Fort Knox might hold fakes too. Congressman Ron Paul even questioned whether the gold is authentic. During the 2008 financial crisis, some believe the U.S. might have sold or leased gold to suppress prices or raise cash. So why not just audit the gold and settle this debate? It's complicated. Officials claim the gold is audited, but no comprehensive public audit has been released. The last full audit was in 1953 under President Eisenhower, prompted by rumors that Fort Knox gold had been used for wartime expenses. Auditors did a spot check of 5 to 7% of the bars, concluding the gold was there, but it wasn't a thorough count. In the 1970s, as inflation soared and the U.S. went off the gold standards, questions resurfaced. A 1974 book claimed $20 billion in gold was missing from Fort Knox, prompting the Treasury to open the vault to 100 congressmen and the media on September 23, 1974. They saw stacks of gold and took photos, but it wasn't an audit, just a PR stunt. No bars were tested or weighed, and only one vault room was actually showed in 1975 to 1981. The Treasury and General Accounting Office conducted partial audits verifying about 80% of the U.S. owned gold and checking 21% of the bars by serial number. They found no discrepancy, but it still wasn't a full audit. Since the 80s, the U.S. Mint and Treasury claim regular audits happen, but details aren't public. In 2017, Treasury Secretary Steven Mnuchin visited Fort Knox with Senator Mitch McConnell, the first Treasury head to do so since 1948. Now, Stephen glad the gold is there, but again, no real audit. Fast forward to today, reports on banks moving 8,000 gold bars, about 2% of the total, from London to New York, have reignited speculation. Some think it proves that the U.S. is out of gold, but the real reason is arbitrage. Banks like JP Morgan and HSBC are shipping gold because it's $20 per ounce, pricier in New York than in London. As gold market makers, they lease the gold and hedge with futures in New York. When geopolitical tensions like Trump tariffs pushed New York prices higher, their short positions started losing money. So they're moving physical gold to New York to settle futures contracts, close positions, and profit from the price difference. JP Morgan alone has reportedly moved $4 billion worth of gold this month. It's not a Fort Knox cover-up, it's just a banking strategy. Still, the lack of transparency bothers people. Even Elon Musk has suggested live streaming the vaults to show what's inside. So why won't the government do a full audit? Is it security or are they hiding something? Economists like Barry Eichengreen argue the Fed and Treasury have no reason to lie. Faking gold reserves would be a massive scandal with little upside, but I'm not sure. There's plenty of incentive to obscure the truth. On one hand, officials say everything is fine. On the other, you've got Elon tweeting, it's gone. No wonder people are getting skeptical out here. We're expected to believe a massive unseen treasure is untouched without a public bar-to-bar audit? I mean, come on. The government could clear up 99% of the doubts with a transparent audit involving independent observers. Instead, they rely on insider visits, citing cost, security, or that it's unnecessary for whatever reason. Uncertainty itself is a problem. If the U.S. gold were missing, it could spark public panic. The dollar's credibility might collapse, inflation could skyrocket, and countries might demand gold-backed currencies again. It could be one of the history's biggest financial crises that we've ever seen. That's why we need answers. The gold is either there or it isn't. It's time that we find out. For now, there's no hard proof the gold is actually missing. All signs suggest it's still there and safe. Maybe Elon will live stream it one day, but will we be able to even trust what we're actually seeing? I didn't get into the aspect bars myself. I didn't get to see it myself. I didn't get to look at it. A real public audit. What do you think is actually going on? Drop your theories below. I hope you enjoyed this deep dive. Have an amazing day. Smash that like button and subscribe if you haven't already. I'll see you next week. Catch you later.